What's good YouTube? It's your boy back again today with another video in the technical series. Now, today's video we're going to go over a very important tool that I like to use in my analysis. Some of you may know it, some of you may not know it, but it definitely aids in confidence when it comes to placing orders in the marketplace. So, without further ado, let's go to the charts and get straight to it. So, when it comes to trading, it's not just about technical analysis and entries, although those are very important. But when it comes to actually placing the order, placing it at the right time is just as important as actually finding the signal. If the signal occurs but it's not at the right time, you know the saying, wrong place at the right time or wrong place at the right however the saying goes, you're at the right place at the wrong time or the wrong place at the right time. Basically, the point is timing plays an important role in trading. Now, depending on the currency pair you trade, different times that currency pair may be more active than others. If you're trading a Asian currency pair such as USD JPY or the Aussie dollar or the New Zealand dollar, they might have higher active hours during the Asian session. Whereas if you're trading another pair such as a USD based pair like Euro USD or USD CAD, it might be a bit more active during the US session. And then if you're trading a Euro pair or a GBP pair, there might be more volatility during the London session. So knowing your pairs and knowing what sessions that they actually are more active is very important, so that what you want to do is basically find out the pair that you trade, what session is it most active in, and try to trade that session, because that's the session you will get the most volatility. We as traders want movement. We capitalize on price movements from A to B. So find the session where your current currency pair has the highest probability potential of actually moving from a point A to a point B in the fastest amount of time. Now, why? Because we don't want to be stuck in trades for longer than we have to. We prefer to get in trades and out of trades as fast as possible, so that we can utilize that capital, that margin that is tied into that trade in other trades. You don't want your capital to be tied to a trade for such a long time and then miss out on other opportunities simply because of margin requirements. You might have a risk management plan where you only trade 1% per trade on your account, and maybe at any one time maybe you only risk 3% of your account. So if you're in 3 trades and all of your margin is tied up to those three trades, 3% of your account, and then maybe you're looking at a few other opportunities that are presenting themselves in the market, but it's taken so long for these trades to reach completion, you won't be able to take advantage, and then that will lead to some mental anguish, and then you might end up potentially breaking your rules, which will start the domino effect of just going down a deep rabbit hole of another psychological disaster. So what we want to do is we want to enter at the right time. Entering at the right time gives us the highest probability of entering the trade, potentially having the least amount of drawdown, and then that trade reaching completion in the least amount of time possible. Now obviously this depends on what trading style you are. If you're a position trader, if you're a swing trader, if you're a scalper, if you're an intraday trader, the time frame varies. But based on your own time frame, regardless, you want your entries to be as pinpoint and as precise and experience the lowest drawdown possible. And that's what session indicator or session trading does. So as a trader, depending on your currency pair, you want to focus on that specific currency pair's trading session and only enter during those sessions. Now in order to do that, there is an indicator on TradingView that can help you with that. Now if you don't use TradingView and you use MetaTrader or CTrader, I'm pretty sure that you can find indicators that will help you with this. But basically all this does is it allows you to view your sessions in a nice colorful manner. So like for instance, you see here, right here to the left side of the chart, I have this indicator here called sessions. I can hide it and I can unhide it at the same time. So let's say you don't have it on your chart. All you have to go to the indicators and strategies option on your TradingView and just type sessions. And actually there's a lot of them on the TradingView and the public library. So as you can see, this is the one I use currently, JRFX Addict. It has over 700 I think this is likes, so a lot of people like it. There's another one over here with over 5,000. So there's so many popular ones, and they all do similar things. Basically they have slight differences in terms of the color combinations as well as the timings also, but for the most part you can even find ones that are completely customizable. Like I have another one here called time zone, and if you click on this time zone and you add it to your chart, basically when you go to the settings you can actually customize the time that you want. You don't have to depend on the one that's provided. But for my own use, the session one indicator is nice enough for me. Now I think when you first use it, it won't look like this. I think there will be another color. So as we all know, there's 3 sessions. There's the Asian session, there's the London session, and then there's the New York session. So basically in my time zone, this is where Asian session starts. So this gray or dark gray zone is where the Asian session starts, and this is where it ends. And basically London starts over here with this green shaded part, and then London goes all the way till here, and then this is where the New York session starts, and then New York ends over here. So red and green, when you mix them together, apparently it gives you some shade of brown, so that's why you can see the overlap here. So this is the overlap between London and New York, and you know, as we all know, this is like most liquid, most volatile session or period of the trading day. So from here, starting from Asia all the way to the end of New York, that's 24 hours of the trading day. So you have Asia, London open, New York open overlapped with London, London close, and then continuation of New York all the way till New York close. So you have your 24-hour period here. So this maps out the time. So if you're an Asian-based trader, you know to be more active during this period over here. If you're a London-based trader, you know to be more active during this period over here. And if you're a US session-based trader, you know you should. This is where you will, definitely want to be a lot more active with your trades. Now let's give an example of how this session indicator will help you with trades on a chart. So let's add a symbol. Let's go with the USD CAD, for instance, which is basically, they're both USD based pairs. So the USD currency as well as the Canadian currency. So let's just do a little quick analysis as to the situation. So let me see, why is the colors, oh okay, because it's in monthly. Okay, that makes sense. Okay, so let's take out the session for now, and let's just do a quick analysis based on the trading wisely approach. So basically, as you can see, the latest swing on the monthly was broken to the downside, so this is bearish. So that's our bias right there. Let's go to our trading time frame, and then let's look at the charts and try to see if we can plot some zones. So as we can see, like for instance, okay, let's look at this right here. As you can see, there was a swing over here, and this swing was broken very, very impulsively. So what we would do at the trading wisely approach, we would highlight our zone. This would be our zone right here. Now I'm going very, very quickly because I'm not going over the actual strategy, because the strategy, I've already outlined it in the technical series, and if you haven't, I'm going to put a card up here. You can just go and then get acclimated with the different strategies that we use, elements to our strategy in the trading wisely approach. So yeah, make sure you watch the videos just to get acclimated with all the specific elements to the strategy. So based on our strategy, this would be a zone for us. So even though we are bearish, when price comes back to this zone, we would definitely be interested in looking for potential trading opportunities. And as you can see on this candle right here, this 4-hour candle, there was a return to the zone. So let's see if we could have capitalized on a trading opportunity there. So what we would do, we drop to our trading time frame, which is the 15-minute, and let me go to where I indicated that. Yep, right there. As you can see, this did provide some sort of a bounce. So let's see if we could have capitalized on it. So how would we have capitalized on this opportunity? Well, maybe, you see, as we see, there was a bullish engulfing candle right here. So that's definitely confident, definite signal for us to take the trade long. But let's also look at the session. When did it occur? Right, you see, as you can see, this is the open of the New York session. So New York session did a in London, price came, it came down again, and then in New York it did another drive right into the zone, and then it gave a bullish signal. So combining all of these elements together, that might have given you confidence in order to take this trade. And as you can see, let's say you put your stop around 5 pips below, which would be around 15 pips. Easily we could have gotten a 1 to 3 trade on that day in just the matter of a few hours, you know. 1 to 3 potential, you know. Obviously because we're going against the grain, our bias was bearish on the monthly. So as soon as you're in profit, maybe 1 to 2, 1 to 1, 1 to 2, you would definitely lock in some gain and then move your stops to break even. So even though price ultimately came back and took you out, you would have definitely been able to capitalize on that move. Why? Simply because you use a session indicator and you know what session that your currency pair is trading, so you know the probabilities are in your favor. So let's just give one more example before we why did I do that? Not that. Remove the drawing tools. Let's just do one more example. Let's add another pair. Let's say not GBP USD. I already have that. Let's say Euro JPY. Euro JPY. Actually, I don't like Euro JPY because it's half in Europe, half in JPY. But whatever, you know. Let's add it. So Euro JPY. Let's go to the monthly. Turn off the session indicator. Let's go all the way. What are we looking at now? Now we barely clipped the high of this, even though it was not impulsive. But even before this, we were definitely, this was the latest swing that was broken. So we are bullish basically on the monthly. Fine. Bullish here and even bullish here, even though we just clipped it, but basically bullish. So we'll be looking for bullish opportunities on the lower time frame, right? So let's see let's see, let's say for instance over here there was a swing here, this swing here came down and got broken. Now this swing was broken with a push down here, as we can see. So what we'll do is we'll use this candle as our zone right there. Boom. So there was a impulsive swing that broke these two levels, which was a pretty major, and ultimately here over here. So once price comes back over here, we will be interested in looking for potential shorts, even though our bias is bullish. You know, just because our bias is one way does not mean we cannot take opportunities of the other trades that present themselves in the other perspective. The only difference is the way we manage our trades. So what we do next thing would be to drop to a lower time frame and look at the time where the price is. Then we do use our sessions, and as you can see, Euro JPY, since half of the Euro JPY is Japanese yen, and Japanese yen is an Asian pair, as you can see there's a lot of movement during the Asian session. So but during the Asian session price did not come to our zone, but once the London session came through, then it tapped our zone. So because Euro is London or is London based, we can definitely look for signals within that period. So as you can see, this is where the price came. And what did it give us here? It gave us a nice little pin bar rejection here with a follow through of a bearish candle, which if you combine the two of the signals that we use here in the Trading Wisely approach, so you could have easily used that as your signal, right? Either here or here, depending on how confident you are, you would place your stops above. Let's say it's 8 pips over here, so 9 pips, so 5 pips, so it would be around 14 pips, and then you would just, you know, target whatever it is you feel like targeting, you know, ultimately. And as you can see, within that 24-hour period, you definitely got, how much were we able to get? Almost a 1 to 2 in that day. It came back and it tapped, but it never took out your stop loss. Now depending on whether or not you moved your stop to break even, that's a whole nother thing. But as you can see, that is a way for you to definitely take advantage. Now if let's say because you only trade on the Asian session, maybe you can't work or you can't be at the charts during London session, well then maybe here did not give you a signal on this day, but maybe on the following day, as you can see, price came right back to the zone and gave another pin bar rejection during the Asian session. So that could have been your catalyst to enter a short based knowing that it's at the zone and you're expecting prices to go lower, and it gave you a signal during your session, 5 pips, add another 5 pips, so that's like 10 pips. And then what would you do? You would just, wait for lower prices. So basically that session indicator helps you narrow down, not only technical analysis helps you narrow down where you want to take the trade, at what price level around or price range, because you're using our zones, but then the session indicator also narrows down the time period where you should be looking for those signals to occur. And if you have these session indicators on your charts, it's very, very, very nice and beautiful and easy to look at, and then you don't get tempted to enter trades that occur outside of your session. So if you only stick to entering your trades within your session, and I urge you to try this if you haven't already been doing this, and then take a log of all your trades and look at the trades that you take outside of your session and look at the trades that you take inside of your session, and then maybe take like 30, 40, 100, and then try to see what is the probability of you actually winning a trade when it's inside your session as opposed to winning a trade when it's outside of your session. And I'm always guaranteed, I'm almost 100% sure that you will find out that most of your winning trades come when you enter it within your trading session. So this is just a quick video that I wanted to make, but I think it ended up being a lot longer. But because this session indicator has really helped me in my trading, I believe it will help a lot of you. So yeah, if you like this video, make sure you comment, like and subscribe, as I'll be releasing a lot more tips in the near future. Peace out.